Now, a wedge is sort of like a triangle pattern with both trend lines heading in the same direction. Now, for a wedge to be called a wedge, you need to see at least 5 reversals. And wedges are also very long in duration. They can last for many months, maybe a year, something like that. And they're generally characterized by declining volume as the pattern progresses. Now, rising wedges, as I said, they're bearish patterns. So these are patterns that trick inexperienced investors because what you're seeing here is higher highs and higher lows. And what's the tell with rising wedges is the volume itself. Because as the stock price is going higher and higher, volume is going lower, meaning that the thing that is pushing the stock price up is most likely coming from retail interest, not from institutions, because it's the institutions that bring in the heavy volume. And the way I can explain this in a very logical way is that if there's a lot of volume going in the same direction as a trend, meaning that the stock price is going up, the volume is also going up over time. It means that a lot of stocks were traded hands, but overall, the predominant pressure was buying pressure. Now, conversely, with rising wedges, what we have here is a rising pattern. The stock price is going up, but volume is going down, meaning that you have a divergence in this case. Not a lot of people are pushing the stock price up. Not a lot of people are exchanging hands, making the stock price go up. Therefore, it's not sustained. There's not enough people going behind this movement. As with most other patterns, what characterizes the pattern is the reversal on the breakout. Usually when the breakout occurs, you see a volume spike, which indicates that the move is going to be definitive. Now, moving on to the falling wedge. The falling wedge is the opposite of a rising wedge. It's a bullish pattern. A falling wedge is characterized by a minimum of 5 reversals with lower lows and lower highs as well. And experienced investors might think that this is a very bad thing. However, as I said previously, the volume is decreasing throughout the pattern. Or I could also say that the volume is low. Counterintuitively, this is actually a good sign. It means that the big players are probably just holding the stock and that there's not a lot of trading going on. How do you trade a falling wedge? Same thing as the rising wedge. You wait to see the stock price break out from the wedge on high volume, and that's what triggers your buy signal. In order to confirm that the breakout is in fact true, you can use various breakout confirmation methods, and I'll leave the link to that video in the description below. And in that video, you can basically see what are different ways of confirming that a breakout is true. So that pretty much caps out the video for today. Thank you so much for watching. I appreciate all of you, and I'll see you in the next one. Peace.